Hey guys, this is Rob Mitchell. Thanks for coming in today for the webinar, Order Flow Methods That Cook, Secrets of Order Flow Momentum and Traps with an Edge. And thanks for taking the time this afternoon to come in and visit with us and let us show you a little bit about what we do. And I'm going to cover some theory. I'm going to cover some examples. These patterns work over all different kinds of circumstances, but we'll get into the details of that as we go. First and foremost, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. And so be sure not to use the grocery money for trading. The patterns I'm going to show you have a history of working really well. And at the end of the webinar, I'm going to give you a link to a resources page where you can learn many more high probability trades and money management techniques like the ones that we're going to do in this presentation. So the concepts I'm going to share with you today involve the understanding of what drives markets fundamentally. And so it just gets down to that least common denominator of what drives things. And so you could enjoy the webinar just from that perspective alone, but then when we get into some examples, I think you'll like it. Yeah. But at the end of the webinar, I'll get you that link. These are things that you cannot see just by looking at a chart. A lot of times, indicators that are on charts, you can determine what's really going on, even if you took the indicator off. These indicators that we are going to use today will show you things that are hidden behind the scenes that give you an edge for something that is known to lead the price action and the price movement in a trend or in a counter trend. But for the most part, we encourage doing it with the trend because you get stacking and probabilities join in with that and improves the chances for success. So in order to illuminate these concepts in order flow, we're going to use the Trapped Trader Oscillator Advanced. It's a 4th generation order flow indicator we've been working on for about 4 years now. And this is the first webinar that I've ever done where I've released this. We've been using this for a good long while in our trading room and have refined many techniques with it. And so I'm going to cover a lot of stuff in this webinar with this. So you might want to take some notes. And I will also repeat myself a good bit to remind you as we go. So some primary concepts to get started. Concept number one is when it comes to order flow that's properly organized, order flow tends to lead price. And this is best seen using geometries or shapes, either on their own or in relation to price action and market structure. When I first started years ago looking at order flow, a lot of times there would be an order flow indicator and it would have just all kinds of information all over the screen. And I found that that was very taxing to approach a chart with that kind of information on it. And so I started asking the question, what is the thing that I could do to reduce that to its minimum, as I said, least common denominator, and get me to a place where I could see where the order flow was leading price or where it was trapping traders and present it on the chart in a way that was easy to understand and did not take a lot of my attention, because if a lot of your attention is going towards interpreting what's on the chart, then it makes it difficult to do the trading. And so you really want things to be the absolute minimum patterns, and further still, you really want to be able to see those patterns before they're happening on the chart. Before they're happening on the chart. So geometries or shapes is the way that these things are shown. And shapes or geometries are really fundamental to anything in nature, but it's also true in trading. Shapes or geometries are fundamental. Like if you look at chemistry or whatever, a chemical compound has a certain shape. Well, in the same way, these basic geometries or shapes are fundamental to price action and order flow. And market geometry or shapes is the least common denominator in market analysis. Yeah, the techniques that we're covering today will work in any reasonably volatile market. So firstly, we accomplish this using a structured price bar with a structured order flow indicator. Yeah, we're just going to be looking at order flow today. There are other concepts that we could bring into it, but we want to keep this simple. And I'm also going to discuss a little bit later why it's important to minimize these things down to the minimum thing that stands on its own. Yeah, we'll get to more of that in a few minutes. So for this, we're going to use a price bar. It's a custom price bar called the Smart Super Renko, and we're going to use a Trapped Trader Oscillator Advance. This bar type is highly recommended for the applications that we're discussing today because it in itself, because of its structured nature, creates geometry or shapes on the chart. Yeah, other bar types may not have the capabilities necessary to do what we're doing in this webinar. Yeah. So when the chart's organized this way, it can reveal, market geometries and actionable trading signals with known statistical probabilities reveal themselves, and also reveal themselves in a way so that you know it's happening before it happens. Similarly, these patterns are highly repeatable. They occur over and over and over again. Like yesterday in crude oil, just off the top of my head, maybe 60, 70 times in a day. Yeah. To illuminate this concept, we should, as a basic proof of concept, see order flow showing its hand before the market turns and expands in a given direction. The order flow pattern will generally show that direction, and then the price will follow. And this has really been the basis of a lot of my trading. Is both this type of patterning occurs both in price momentum, but it occurs in order flow momentum much more efficiently than in price momentum. But also, when you get both of those together, it can increase the probabilities for success. And we'll cover a little bit more about that too. One of the most basic such order flow patterns that can be used independent of price action is what we call the 3-dot pattern. And it comes off in a sequence. First, you get the 3-dot pattern, and then what we call the 3DV pattern, and then finally the 3DVE pattern. So they go off 1, 2, 3. You also know on the 3-dot pattern before it's occurring because you get a sequence going into that, and we'll cover that in a minute too. This pattern can be identified in microstructures as well as the larger ones. It's fractal. It happens in any scale that we're applying it to on these charts, and we call that pattern a mini. The mini pattern's not in the manual, and so it's only been made public so far in this webinar. So I'm sharing something with you. It's a little kind of a secret, that I haven't shared outside the trading room. I personally trade this pattern many times each day. Like I said, there'd be, yesterday maybe 40, 50, 60 of these setting up. For the larger scale pattern, the 3-dot patterns that we're talking about, the sequence goes like this. First, you're going to see 2 dots. And they're going to be higher or lower dots. And if you got 2 higher dots or 2 lower dots, then the next one is you're going to look for is to get another higher or lower dot. So if the structure is not violated, the 2-dot structure is not violated, then you're going to get 3 dots next. We'll look at a whole bunch of examples in a few minutes. So following the 3 dots, if the right edge of that pattern is violated, and then the market hooks again or reverses again back into it, we call that the 3DV pattern. And then if it does it, well, on the 3DV pattern, it's because it forms a V kind of shape. Just super simple, a V shape. And then it'll be a V going up and inverted V going down. So this is an example of an order flow trap or an order flow momentum kind of situation, depending on which one of these categories we're talking about. So In this case, traders get caught on the wrong side of the market. And the order flow indication will let you know that that's happening. You don't need to know that, but it's just part of the theory that's behind it, and we'll get into that theory a little bit more in a minute. So if it breaks the right edge again, we call that a 3DVE, and the E just stands for extra. Yeah, and we'll look at lots of examples. So when traders get caught in an order flow trap, generally they're going to stop out and drive the market in the direction of your trade. I've heard traders for years say things like, oh, they ran the stops, or they did this or that. This kind of thinking behind this is to keep you from getting caught in those kinds of situations. You want to be on the right side of these traps. So one more concept to complete this idea is trends generally develop in the following way. So given that a market's reversing, the first participants will be short covering or long liquidation. They'll be getting out of their trades or getting stopped out. And then this will drive a small trend most of the time. And then in order for that to turn into a bigger trend, the next step is new money, longs or shorts, depending on which way it's going, will enter the positions and drive the market even further. The market repeats this pattern over and over and over again with identifiable geometries and order flow and price many times during the day. I could put this in super simple terms. The market goes up and it goes down, but it keeps its structure intact while it's doing it. Yeah. Well, these 3 dot patterns that we're talking about are showing you just that. Yeah. And like I said, we'll look at a bunch of examples. So let's look at a chart and see an example of this whole process. So I have here in the second panel, this is the Smart Super Renko that we talked about in the first panel, the price bars. And these bars have, on this particular chart, are set up, each of these is five ticks. And then when you get a reversal, it's 10 ticks. And we call those reversal bars, and then the 5-tick ones, we call them continuation bars. But as just a general overview of this concept, what you'll see as the market tops out is you'll start to see this 3 dot pattern. So first you get the 2 dots, and then this one comes up and it doesn't break that right edge. You see that little line right there? It's lower. We have 3 lower dots right there. And that tells you that the order flow is negative, even though the market's going up. Collectively, when you see a pattern like that, it's telling you that some time frame or component of traders that are participating in this market have been selling it while it's been moving more or less sideways. Now, all this action is inside all this prior structure right here. Now, and so when the 3 dot forms, it tends to go lower, and it's leading that driving lower. Then what happens is the market comes up and it breaks that right edge, and you pick up the 3DV, and the market goes lower from there. So what's actually happening here is that overall during this interval, where you're getting the 3D pattern, you know that there's overall selling going on. When you break the right edge, the participants, at least the theory behind it is, the participants that caused this to happen are still present. And particularly so if you didn't break this up here. So because these guys are still present, these guys are trapped. So this 3D pattern is a order flow momentum pattern. And this pattern 3DV is a continuation pattern to the prior one. And these guys over here that bought going up over here are trapped. Similarly, as the market bottoms out over here, you'll see you pick up the 3 higher dots again. When you start seeing a 3 higher dot, you got to be suspicious that they're taking it higher or lower in the direction of the dot pattern. So overall, and this is just a general overview of the concept, The order flow is negative through this region on the chart, and the order flow becomes positive over in this region of the chart. And that will tell you in advance how risky it might be for you to start engaging in one side or the other. Yeah. So another primary concept that we could add to this is that these patterns in order flow and price action are fractal. They occur on different scales. They occur in all different scales and magnitudes, even down to micro scales and even within a price bar. So given that, we'll see occurrences where this same 3D pattern happens within the smallest bar on the Smart Super Renko. And I'll show you an example of that in a second, but taking the earlier chart, we could look at some micro occurrences of the above concept. And these can only be done on the Trapped Trader Oscillator because the Trapped Trader Oscillator Advanced that we're using here is a significant upgrade in capabilities that enables you to see actually down inside the bar. The earlier versions of the Trapped Trader Oscillator could not do that. And so as we developed what we call a TTOA, Trapped Trader Oscillator Advanced, we started developing these same techniques that we use in the larger scale inside the smaller bars and inside the bars themselves. And we keep finding new capabilities with that all the time as we use it daily. So let's see, I told you we call these a mini, I also call it a micro, but what you're going to see here is you're going to see, you're going to be getting lower highs on this Trapped Trader Oscillator, and then you take out the right edge and you get the continuation. Yeah. Now same thing here, lower, yeah. Take out the right edge. What is that? It's a trap. All these guys in here bought, and then when it came back down through, the market continued lower. Yeah. And we're coming down here, you're getting lower. You take out the right edge, and then you even 3dV right there. You 3dV and then you 3dVE. Yeah. So the pattern you're going to see is first you're going to see two higher, and then you're going to see another higher, and you're going to see it break the right edge, and then you're going to see it go. Now there's all kinds of other patterns that we're not going to cover, because when we do these kinds of things, we always keep these things as their individual simple geometry. We don't try and combine other things with it. We'll do that later, but for this level that we're looking at this at, we want to let that stand on its own. So I showed you the pattern in a larger scale as a 3-dot pattern or a 3dV pattern, and then we looked at what's essentially a 3dV pattern happening where these little traps occur in the order flow inside the bar. You know, very powerful stuff. And I'll show you in a little bit all the different ways that you could use that. So another primary concept we could add is how do we use it, right? So you could use it to enter a new position. That would make you new money coming into the market. You could use it to hold an existing position. You're like, no, I'm getting that pattern on there. And I know that that's a continuation pattern. So I know that it's safe, or the probabilities are stacking in my favor to continue holding. And then you could also use it to exit the position and get out of a position if it looks like the patterns are not persisting or signaling. Yeah. And so I'll use these personally in all these different ways during the day. So going further, the concepts that we've covered are only one of more than 20 of these patterns that we know. And like I said, that little mini pattern that I've showed you here is not in the manual, but you've got it from this webinar. Yeah, I hadn't made that public to anybody yet before today. Yeah, so you really only need one of these patterns, but we have many of these. And then what's cool is that these will fire off in sequences, and sometimes they'll happen at the same time. So they either happen in a sequence or they happen simultaneously. So the chart that we've been using as part of the Smart Patterns trading system, in fact, that's the exact same chart that I use in the trading room daily. And so this collection of tools used for that. And then other patterns or panels in the chart, the first panel was the price action or the price bars, but that also gives shapes. And we use that as well in understanding what the market's trying to do. And then panel 2 is the order flow. That's the Trapped Trader Oscillator Advanced. Panel 3 shows the momentum, but today we're focusing on the price bars and the order flow, Trapped Trader Oscillator Advanced. So in addition to the price action, order flow, and momentum, we'll also use what? Support and resistance. Yeah, I call this the 4 quadrants of a trading system design. So when you put all these things together and they're all suggesting that the market's going in a certain direction, then all those factors combine together into an integrated whole. But we're taking each one of those on its own, and then we're taking those factors as an integrated whole. And where they line up, you tend to get what we call probability stacking. So according to the following general rule. So I don't accept anything less than 75%. If one of these patterns that we're talking about are geometries or shapes or whatever name you like to call it, if it can't get at least 75% to follow through and none against, then on one of them alone, you've got 75% probability to success. If you've got 2 of them stacking at the same time or even in sequence, the success becomes 90%. Yeah, so you get 2 of them, you're 90% to follow through. And given 3 of them, you get to 96%. And then 4 of them is 99%. And 5 of them is 100% to follow through. Is that a guarantee? No, it's a strong tendency. It's a strong tendency. And as we look at these charts in a few minutes, you'll see what I'm talking about. Sometimes you get as many as 7 of these will stack on a chart all at the same time from all the different, order flow, price action, order flow momentum, support resistance, and momentum. Yeah. And so sometimes they'll stack sequentially. They'll fire one after the other. And depending on what's happening, those might stack for the same period as well. One example of this we already covered was the 3DV and the 3DVE patterns. Yeah, that pattern in itself is a sequence. In some cases, however, you can see that the next sequence in a pattern before it occurs. Yeah. In other words, as you get that 3 dot or the 3 lower ones on the mini or the 3 higher ones on the mini, and then you take out the right edge of it, you've got a trap. And it tends to follow through. Other times they'll stack simultaneously. It'll all happen at the same time. And there are different nuances to those things, and we cover those in our classes daily. At the end of this webinar, I'm going to give you a resource that covers all kinds of these patterns. Yeah, all kinds of these patterns. And I teach these, as I said, in the trading room daily. So, but due to the brevity of the webinar, I can't cover them all. There's really probably 30 of them in the resource I'm going to give you later. And so that creates literally thousands of possible actionable trading combinations with high probability to follow through and probability stacking, sequential and simultaneous. And so because we broke everything down to its minimum least common denominator, when you're getting multiple of these signals at the same time, essentially you end up with 30, 40, 50 or more different trading systems in all the combinations. And it's super powerful stuff. So why do we do that? Well, if I've got 3 components, the first one's 75, the second one's 90, and the third one's 96% to go, and one of them fails, I still got 90, don't I? I still got 90%. So it makes it very difficult for a trading system to fail when you keep each of the individual components of it standing on its own merit. Yeah. So we've been focusing on the Trapped Trader Oscillator Advanced from IndicatorSmart. This tool was originally designed as a third generation order flow indicator with the purpose of finding where traders of the four quadrants are trapped on the wrong side of the market, and also where there's a high order flow momentum. Now, traps and order flow momentum. That third generation indicator was called the Trapped Trader Oscillator, and the new one's called the Trapped Trader Oscillator Advanced. And it can actually be used as a standalone trading tool. You could develop successful trading systems just off of this tool alone. Yeah. But like I said, when you add the price action, the momentum, and the support resistance, and other techniques that we've figured out over the years, you get the stacking. You know. So what's the generic probability? We're looking at this 3D pattern. And so what we want to do is we want to get a metric on that. Yeah, what's the minimum follow through on a 3D pattern, and what's the probability? Yeah, because if I know that that's better than the 75% minimum that I'll allow, then I can accept it. Now, we've been doing these 3D patterns for years, and so we know they work. You know, I'll talk a little bit more about that in a few minutes. So we're going to use something called Smart Trade Markers from IndicatorSmart, and we're going to take a look at what the statistical profile for this 3D complex is. Smart Trade Markers enables us to get a full statistical profile. And the cool thing about it is what I used to spend hours doing, I can do it in just a few minutes with trade markers. So for the charts that we're about to look at, I went through the 3D complex. You know, I went through the 3D complex and I just marked them out without regard to anything else. Without regard to anything else. And I did this from when I made this webinar. It was on the 24th of June. You can see the date right there. I prepared this webinar for today on that day. And I got, what, about 9 days in there. Yeah, it was a 224 wins and 4 losses. Yeah. 97% to 5 ticks, 95% to 10 ticks, and 95% to 25 ticks, given that I go to a break even after I go 6 ticks. Yeah. This is just a general trade markers performance summary. You know, performance summary. And we could look at a lot of things in this, but it's beyond the scope of what we're doing with the webinar today. What do we have in here? 1, 2, 3, 4, 5, 6, 7, 8 days. Yeah, we had 9 days on the chart, but there were 8 days in here. You can see the win percent for each day. Trade markers breaks all that down for us. And shows us the profit and the loss and the number of trades that happened during the day and all the different statistics that we can use to understand how the market responds to this particular shape in the order flow. Now, like I said, without regard to price action, without regard to anything else. And then Trademark is also capable to break it down into different time segments. So I could ask the question, well, where does this thing perform the worst? You know, probably performs the worst, 83% around 8 o'clock, 75% at 10 o'clock. Market often gets kind of quiet in there. These other periods later in the day are pretty rock solid. And in general, it's pretty rock solid. Yeah, so this is the kind of thing that you want to see. It also gives me the duration that I'm in the trade and things like that. Yeah. So given all that, let's look at some charts, given the above trade markers report. Now, that chart, we're going to do that for this 3D complex that we've been talking about. Though the probabilities are high on the sample, generically, and when you get the resource that I'm going to give you later, We've only considered this to be 75%, but in the last 4 months or so, about 3-4 months, this thing has just been on fire. Yeah. So I'll only use, even though I got that really super awesome report, I know that over the last 3-4 years, that this thing is well in excess of 75%. So I just call it 75%. Yeah. I don't try and get real rocket science oriented with this kind of stuff. I just know it's got at least a 75% to follow through. And if I've got 75%, it's sufficient to warrant its use. Yeah. So because we've been doing it for years, we don't have to test to know it works. But I do it for you so you can see what the numbers might be like. Yeah, so keep in mind also there's other patterns occurring on these charts. There's all kinds of patterns occurring on these charts. Technically hundreds of trades a day if you really wanted to get down to that. What I usually suggest is that you pick the better ones where everything is lining up and stay away from the lesser ones. Yeah. So we're only isolating to the 3D patterns. So there are a lot of cases on these charts where there was probability stacking with other factors. And we already went over that. You've got your 275s is 90, 375s is 96, and you go 99, 100, etc. Yeah. So why, again, in more detail, why do we isolate that 3D pattern alone? Because in order to use the pattern for probability stacking, we intentionally do not combine it with other factors. This is super important. Yeah, it's super important. We want indications on our charts that are simple, easy to see, and then entirely stand on their own merit. Yeah. So as I mentioned, there are many of these patterns that can be used to stack, that stand on their own, from the price action category, from the order flow category, from the momentum category, from the order flow momentum category, from the support resistance category, and some from what we call market mapping category, where we map out how the market will be shaped in a much larger scale in any given time interval. Yeah. So given all these, there are just tons of trading opportunities all over the charts that stand on their own merit. Yeah. And then when they come together at the same time, you get the stacking. But we're going to look at some examples now. We're just going to keep it to the 3D complex. And I just did all of this so you could just see it. And I'm doing this without regard to the price action or anything else. You know? And so, you pick up lower dots. Some of these on these charts I marked for you, and others I may not have in all the detail. You're getting lower dots and the market's going lower. You get lower dots again. The market goes lower. You get a 3D V. Yeah. 3 lower dots, break the right edge and hook. Yeah. Oop, what's happening here? Now picking up higher dot pattern. Yeah. And a higher dot pattern right here. And then what do? You come back and you do a double bottom and you V. Yeah. What do we call that? 3DV. 3DV. Here we're getting higher dots over here again. Yeah. Higher dots. Oop, we broke the right edge there and I didn't mark it. There's another one there, right there. I probably didn't mark that because it was past the end of the day. Yeah. But that's technically a 3DV right there. Yeah. And there's other signals that are going on with the momentum here and with the price action. And I just went over the 8 days that I had there, and I marked these for you. Yeah. So what are we getting here? 3 higher dots. See, all that order flow just reduced to a simple shape. 3 higher dots. Yeah. 3 higher dots. Oh, what's it do? Oh, it breaks the right edge and it hooks. Yeah. Now market goes higher. Yeah. Would I necessarily have taken any of these trades? Not necessarily. And we're just taking this indication for the order flow in the 3-dot complex, and we're just marking them out on the charts so that we get an individual statistic for anything that falls into the category of a 3D complex. What do we get over here? 3 lower dots. Now what'd you get right here? 3 DV. Was that one lower? Maybe it wasn't. Yeah, so we had 3 lower dots there and a 3 DV here. Yeah, this would be a 3 DVE right here. Yeah, 3 DVE. 3 lower dots here, here, and here. Break the right edge once, break the right edge twice, and we'd expect it to go lower there. Yeah. Well, getting higher dots here, market's going higher. You know, 3 DV, market higher. You know, 3 lower dots again, boom, boom, boom. You know, and what? 3 DV. Super simple to see. 3 lower dots, sell. Break the right edge, hook. You know, this one right here actually falls into a different category that stacks on its own. And so that trade is stacked. A lot of these are going to be stacked, but we're not going to get into all those details. You got higher dots over here again, you know, higher dots over here again. You know, I didn't get that one on there for whatever reason. Yeah, this one was a 3 dot or probably carried over from that other chart. Now, what are we getting here? Lower dots. Now, what are we getting here? Lower dots. What's this? 3 DV. Lower dots, broke the right edge, hook. You know, what do we got right here? 3 higher dots. What do we got here? 3 DV. You know, just super simple. Like I said, I was finding, you know, years and years ago when I first started learning this stuff, and like spending like 40,000 calories of mental energy just to keep track of the order flow. And I'm like, no, we got to get this reduced down to something that's usable. You know, this one is a lower dot here. This is a 3 DV. You know, broke the right edge here. This is actually what we call a 2 DB pattern. Picking up higher dots here. Now suggesting the market wants to go higher, comes back down, double bottoms, does 3 higher dots again, goes higher. 3 higher dots again, goes higher. What's this one here? 3 DV. Yeah, 3 higher dots, break the right edge, hook. Yeah. Well, how about this one? Now that's 3 DV, this one's 3 DVE. Yeah. What are we picking up that's going against it at the same time? Lower dots. So the market makes a little breather going down there. Would I personally take that trade? I wouldn't. Why? Because the price action structure is up. But like I said, for the purpose of this webinar, what are we trying to do here? We're trying to get a statistical profile just on the 3D complex alone. Yeah. And what are we getting here? 3 lower dots. Yeah. Boom. 3 lower dots. Boom. 3 lower dots again. Boom. 3 DV. Boom. Oh, we got 3 higher dots here. 3 higher dots, 3 higher dots, 3 DV. I didn't mark these, because it was past the end of the day. But they're on there. What do you got here? 3 higher dots. What do you got here? 3 DV. What do you got here? 3 lower dots. Usually I won't do this in the after session because you can and depending on the day of the week it is, or some of the days in this market have reports and things like that. So I usually just do these during the day session, which is the time of day that I trade. What are we picking up here? 3 higher dots, 3 DV. I didn't get that one on there. I was picking up lower dots here, took a little breather. The structure stayed intact. Now what do we get here? 3 higher dots. How about this one? 3 DV, I missed that one. Missed that one. 3 higher dots right here, 3 DV, etc. 3 lower dots. Market starts reversing over in here. 3 lower dots. I don't remember what this one is. 3 lower dots, 3 lower dots, 3 lower dots, 3 lower dots, 3 lower dots. It's lower, 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 lower. Market just moving like crazy going down through there. Now then what do we pick up here? 3 higher dots, carries it through. 3 higher dots again, goes up. Oh, what are we getting here? 3 lower dots, goes lower. What do we got here? We got 3 higher dots and we broke the right edge and we hooked. The market goes higher. What do we got over here? 3 lower dots, break the right edge and hook. 3DV. Now 3 higher dots, goes higher. Picking up lower dots over in here. Lower dots, 3DV. Lower dots, 3DV. Yeah. I'm picking up here 3 higher dots. Yep. Order flow leads price. Yeah. So we just looked at, on these examples for the 3D complex, we just looked at 10 charts for examples of this pattern on the Trapped Trader Oscillator Advanced. Oh, you know, why would I take the time with you to look at 10 charts? Well, number one, I want you to make sure that you got it in your mind what the pattern is. So we just went over like, you know, 100 of them or something, right? So I want you to see how the market cycles around these points over several days. Would I necessarily have taken all those trades? No. But I'm getting a statistic on the 3-dot pattern that occurs over and over again all day long. You know, there are many other patterns on these charts that we haven't covered using information from the 3 panels. Yeah, price action, order flow momentum, support resistance. So one thing about the smart patterns trading system is it breaks the market down structurally to its absolute minimum least common denominator. Yeah, in terms of price action, order flow, and momentum, as well as other factors. And that gets you what? Shapes, yeah? So when these things line up, it gets even better. Yeah. So you can trade any of these patterns just on their own. Sure you can. Yeah, you could. I strongly recommend learning one pattern first and then taking on more patterns we teach one at a time after you master the first one. Yeah, don't try and learn 5 of them all at the same time. And the other cool thing is that we've been teaching is that these things go off in sequences. So you know that once one sequence sets up, that another one might be coming. You know? And so you kind of, what's cool about that is it gives you a bigger picture of what the market's really trying to do. So due to all the patterns that we have and that we've discovered over the years, you can mix and match them according to what you like. And this is really important for a trader. And the system's modular in this sense. And so you can use it in a way that's personal to you. I like this pattern. I can see it with my eye. I've learned it. I can see it before it's happening, you know, and I'm comfortable with it. Matches your personality, matches your interests, and your level of development as a trader. Yeah, super, super important that you can use the trading techniques and signals that you have at your disposal in a way that works with you. So let's review a little bit on this 3D pattern. To summarize, we've covered the 3D pattern in a couple different dimensions. Yeah, we did the mini or the micro. Yeah, we did it as a 3D, you know, one on the full bars and then the other one intrabar. Yeah, the mini on the intrabar. So the older 3rd generation version of the Trapped Trader Oscillator can't do that. There are also other things on this chart. There are some bars in the background. I didn't even draw your attention to those. The pressure bars, there's all kinds of signals that come off of those. So if you already have the Trapped Trader Oscillator, there's a nominal upgrade fee. Like I said, there's 4 years of development in this tool. It's very complicated programming to deal with the accessing the order flow information in Ninjatrader. You know, it's a complicated thing. And then also getting all of the various factors in this indicator to work together in a way that you can see it. Yeah. So, but I'm allowing this discount for a limited time only. And so if you like what you're seeing here, you might want to keep that in mind. You know, so you mix and match the signals you like. It's modular. So this kind of trading method is fundamental to the way markets work, you know, from the 4 quadrants and the shapes or the geometries. So the probability of such a method failing is small, because if any one of the components were to fail, then it would only take away a small amount from the system. So like if on 75s, I go, 275s is 90, 375s is 96, 475s is 99. Yeah. So if one of them fails, because of the way I designed this, I only lose a few percent of the system's capability. I only use a few percent. On that first one, I jumped from 75 to 90. But if I've got 3 of them in there and one of them fails, I've only lost 6% of the system's capability. But we've been watching these patterns for so long, for so many years, we know they're good. So as previously mentioned, if we do this where other similar types of factors are in alignment with the trade, such as price action, momentum, support, resistance, we get the stacking. Sometimes we get as many as 7 of those all lining up at the same time. You get up to 5 of these or so, you're at 100%. Does that mean you're going to get 100%? No, it doesn't. That means the theoretical probability and the historical probability is at or near approaching 100% for success, for follow through. And I teach these methods daily in the trading room. In addition to a method I had not previously mentioned called market mapping. And the market mapping is really cool because it tells you how likely it is for the market to go higher, 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 lower, 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 or how likely it is to continue in the same direction. There's all different kinds of market mapping techniques that we use in the trading room, but that's only in the trading room because it's not an indicator in the normal sense of the term. It is an indicator, but it's not something that plots out on the chart. It's something that we do in that I post daily for everybody. It's like a report. And that tells us in a relatively large scale when these things are all stacking up. And so you'll get even more probability stacking with that kind of stuff. So why does this 3D pattern work? It identifies where order flow momentum is consecutively strong, or where it is becoming a trap. Is it a trap or is it momentum oriented? Do you need to know that? No, we worked it all out for you. In the case of the 3DV and the 3DVE, it's a trap. In the case of the 3D, it's a order flow momentum. As the trend recommences, these weak hands who are trapped in the market are forced out, propelling the trade in your direction. So this takes traders who are old money, the old money quadrant, short covering or long liquidation, and it forces them to buy or sell in the direction of our trade. They may even reverse, and in so doing, they become new money entering the market and pushing it even further in our intended direction. Now, I had kind of joked around earlier, for years I've heard people saying, well, they ran the stops, they did this, they did that. It's important to know that the success of your trading is depending on other traders carrying the trade to success. And so if you understand the market from the perspective of what those other traders are trying to achieve, which is what all this webinar has been about, then it stacks things in your favor. You don't want to be on the wrong side of those guys unless you've just got like $1 trillion and you don't care and you muscle the market around or something. But there are problems with that too. So, but even a government or something doesn't have the kind of money to push these markets around, if you ask me. So the method is exploiting the absolute most basic fundamental form of market movement that's foundational to the way the markets work. And use this for entering trades, use it to manage a position you're already in, like holding a trade, or reduce contracts or even add contracts. Use it to stack with other known high probability methods, from all the 4 quadrants that we discuss several times. So how about other markets like the ES, the E-mini? You'll see these same patterns in any market. I use, in the above, we were using a crude oil chart, and it just happened to be the chart that I had up for when I created the webinar. So all these patterns we have cataloged for the Trapped Trader Oscillator and for other indicators that we've seen today. We've got known statistics that stand on their own. Now, I might not publish a statistic for every single one of them. I might just call it adding. Yeah, I might just call it adding. Get things adding to the probability of continuing without having gone into necessarily the detail, because we know it works. Yeah, so is this system based on backtesting? No. So this is an important little subject. It's based on actual observation within the framework that's structural to the way the market works. There's a big difference between that and backtesting. Backtesting is another word for that, could be data mining. Data mining. When you're data mining, you don't have a feel for what it is. You're just extracting the data and trying to root something out of it. And I could get into all kinds of theory about that and the probability distributions and how things tend to regress and things like that. What we want is something that is getting probabilities that exceed anything near random. That's why I got like the 75% cutoff. Yeah. So we use trade markers to get a specific stat profile based on what was already known. You could call it backtesting if you wanted to, but it's really not backtesting. It's just confirmation of what is already known. There are many other patterns that we teach in various forms, involving the quadrants. And many of these have exceptional theoretical, historical hit rates or predictive value that can add to the other signals. We've been talking about that all the way through to get stacking. 75, 75, 75, 75% begets 90%, begets 96%, begets 99%, begets 100%. Yeah. And so you add the signals, even if you just have signals that are adding. You only need the fingers on your left hand, if you're right-handed. You're like, oh, I got 3 of these. Okay, it's worth taking a trade. Oh, I got 2 of them. Well, I know what the market's doing here. I'm going to do it. Yeah. Oh, I got 5 of them. Holy moly. Yeah. Okay, go for it. Yeah. So when you trade this way, there's nothing like it. All you got to do is have a few fingers on your hand to be able to count them once you've learned to identify the simple structure, shapes, patterns, whatever you want to call them. This type of a system design is inclined to stand the test of time much better than the traditional ways of building trading systems, because each statistic stands on its own and is based fundamentally on the way the market works. So you get independent, uncorrelated, simultaneous probabilities that are stacked. Oh no. That was a lot, yeah. So do you need to know all that stuff? Nope, you don't. But I'm letting you know the theory behind the structure that stands on the structure, yeah. And so, you might be able to tell I love this kind of stuff, but we've worked the details out. And, like I said earlier, I recommend you just learn a pattern, and then you learn another one, then you learn another one, etc. So everything else on the charts that we're using here is highly integrated. It's very intentional. There's nothing on these charts that isn't there on purpose. And there's typically showing you things that you can't see just by looking at a chart. It's developed through literally tens of thousands of hours of live observation and testing. And not just me, a ton of other users, and feeding back to me. A day doesn't go by where I don't learn something. Somebody asks a question and I'm like, oh, I'd never thought about that before. And then the next thing we know, over the next couple of weeks, a new actionable pattern reveals itself, just because somebody asked a question. Or somebody might say something that I'd never thought of before. So like I said, there's over 20 of these. There's probably closer to 30 of them in the document that I'm going to share with you. So we don't have time to cover more, but I just wanted to go over this today to give you a feel for what it is that we do. And I chose that 3-dot pattern because it's pretty easy to see and test. Yeah. So in summary, markets fundamentally oriented around certain structural quadrants. Patterns in order flow, momentum, price action, support, resistance, and mapping align with these principles. And when they align, they tend to get follow through. The methods fundamentally exploit what's likely to occur and entirely based on the way the market moves and works. Yeah, it cooks. So join us in the trading room to learn more or check out IndicatorSmart. Yeah, I'm going to give you a resource here in a minute. Oil Trading Room is a live application of these and other concepts. Yeah, so it's done in a live market environment where I'm helping you to see these things in the future. Because any different pattern on your chart, you either see it in the past, you see it in the present, you see it in the future. It's super important that you learn to see it in the future tense while still being in the present tense. Yeah. And so we think it's the best way to learn and to advance your skills and knowledge. And such method is the 3D pattern and other methods. You know, that was just some recent testimonials or comments that people have sent me from the trading room. You know. And so let's get down to some resources for you. Learn about the tools we've covered and get Smart Patterns Trading System at IndicatorSmart.com. If you want to learn in an advanced live trading environment, come visit us at the Oil Trading Room. There's more amazing systems and methods on the webinars tab on the Oil Trading Room. Webinars going back there for years and years and years. Yeah. And be sure to join our mailing list and our YouTube channel to keep informed of more systems and methods. Yeah, if you sign up for the YouTube channel, when we post there, you'll get notification. So to get your special offer, I got this discounted for you if this stuff makes sense to you, if it vibes with you. You know. Go over to IndicatorSmart.com/cook. Yeah. You're going to be able to get a document there. Originally, that was from an article that I wrote for Traders World magazine. And then I just kept expanding off of it as we developed more and more of these patterns. And I added the Trapped Trader Oscillator Advanced and all the different patterns that we do in there. But like I said, the one that I shared with you today, that mini, is not in there. So you know that one. Yeah, you know that one. But there's a bunch more of them in there. Yeah, a bunch more of them in there. So I'd like to thank you for coming in today, guys, and taking your afternoon to learn a little bit about what we do and giving me the opportunity to share with you. IndicatorSmart.com/cook. Oh, hey, Larry. I don't, Larry. This is the first webinar I've ever done for the Trapped Trader Oscillator Advanced and the methods and techniques that we use. But shortly after this, if I'm still around, either this afternoon or in the morning, I'll get this recording posted for you. That'll be on oiltradingroom.com/webinars. Yeah. So when you see that, you can go to that page, and when you see that's posted there, you can watch the recording for this. But it usually takes them a couple hours to render, so maybe I'll do it in the morning. Yeah, do it in the morning. Hey, Greg. Yeah, I'm in Pacific. Yeah. So, any other questions before we finish up, guys? I know we did a lot here. If your head's not spinning, I know mine is. There's a lot of material to cover, and that's why I said take some notes. But we'll have the recording. We'll have the recording. The only thing, Wayne, that you could do what we're doing here in is Ninjatrader. This would be the stuff I'm showing you here. This is like, that's a whole nother subject. This is like a total edge. Yeah. Nobody can see this order flow like we can. Yeah. Nobody can. And so it's really cool in that way. Yeah. If you wanted to get it on a plan like that, on a subscription, Greg, you can email me. Yeah. So if you've got an older version of NinjaTrader, Larry, Larry's asking which brokers are supported. If you've got an older version of NinjaTrader, then it's grandfathered in. You can use it just about anywhere. You know, like I've had my Ninja for over a decade. If you get it new, you're going to use NinjaTrader brokerage. I will say that NinjaTrader brokerage They're very good. Their statements are super easy to read, and it's rock bottom commissions. Yeah. Yeah. So usually what I do, John, on auto entry, any of these methods can be coded in Shark Indicator's Bloodhound, and you can automate out of that. I don't do the Bloodhound coding. We got people that will do the coding, but a lot of our members and stuff code these things up and have it auto execute. But I don't do that for the following reason. I don't want to teach you a method and have a bunch of people firing at the exact same time and price as you. I don't want to encourage the taking of the edge. Now, I'll say something else. I've seen this over and over and over again. I've been doing this over 30 years. Yeah. Yeah, so David, if you already have the TTO, you can do the upgrade option on that. Yeah, so if you go to IndicatorSmart.com/cook, and then you go to Trapped Trader Oscillator Advanced, there's an upgrade option there if you indeed already have it. Yeah, but I don't want to have everybody firing off at the same price. So every day in the trading room we're covering all different kinds of techniques like this, and what you can do is you can code the stuff up. If you need some help, there's people that do coding and stuff like that, and that keeps it on the level. But I've been I haven't read a trading book in years, but it used to be everything. I read them all. Yeah, I got incredible library of trading books. And what I did that might have been different from other people at the time was every single thing in the trading book, I coded it. And I will tell you, I've watched this phenomenon happen over and over and over again. As soon as a method gets publicly published, be careful. And so that's why you got to be really careful what you read in trading books, because once the trading book comes out, there was a book, James Altucher, Trade Like a Hedge Fund. That was probably the last trading book I ever read. And when I got that book, I coded up everything in it. On the day that I got that book, which was as soon as it came out, everything in it worked. Everything in it worked. And then it all went downhill from there. Not all of it necessarily, but for the most part. So I'm very careful to not do things or present things in such a way that it can damage the people that are subscribing. Yeah. So hopefully you'll take that for just kind of my experience on that. Yeah. So all right, guys. Thanks for your questions. Thanks for coming in, and we'll see you on the next one. I'm not sure what that is. Wayne. You'd have to, give me a better idea what that is. Yeah. So, all right, guys. Thanks for coming in today and sharing your time and giving me the opportunity to tell you a little bit about what I do. Yeah. So, okay. Thank you. And we'll see you next time.